Affordability, once again, it hinders mortgage rates. Ladies and gentlemen, for the 4th week in a row, I just did a video explaining how mortgage rates are dropping, the economy is improving, lending is improving, and home buyers are out there shopping again. And hence, 4 weeks in a row, mortgage rates continue to go up, and now we're sitting at mortgage rates in excess of 7%. The world's falling apart yet once again. Believe you me, Fox News, CBS, NBC, ABC, everybody is going to be getting a hold of this, and they're going to be going to town in regards to everything that's happening with mortgage and lending rates once again. Let me break this down for you guys before you guys go out and crawl into a hole again and stop buying. Understand, there's going to be some volatility in the market. One of the biggest things that most people don't realize is that volatility is real. The Feds announced last year that not to expect for mortgage and interest rates to go down until the end of 2023. Expect to see mortgage rates, in lieu of stabilizing inflation, to be able to continue going up over the course of the entire 2023 calendar year. Now, in spite of interest rates going up, mortgage rates can go back down independently. We're going to see mortgage rates. My prediction is that we will see quarter basis point increases all the way into the 3rd quarter of 2023. This isn't an election year, next year is. Ladies and gentlemen, I'll tell you guys that mortgage rates and interest rates in 2024 will go down. Now, when I say will go down, that's my projection, because it's an election year. And when there's an election year, understand that it's predominant that any elected official, especially on a 4-year term, and a president themselves, wants to look like a superhero. So on a 4-year term, we're going to look at Biden trying to strategically position himself where he fixed magically the economics, interest rates, mortgage rates, banking, and he is the cure-all for the next 4 years. And so Democrat, Republican, it doesn't matter. It all works cohesively as you look at politics and election years. But through 2023, there is still real needs to be able to stabilize inflation. Inflation is still real. It's still extremely, extremely high. Understand that until we stabilize inflation, there's going to be an increased needs for high interest rates in order to make money more expensive. Hence, trying to bring down commodities and other nominal purchases that home buyers are seeking every day in, day out, at the grocery store, at the fuel pump, in our building expenses, in lumber, in our cars, our automobiles, the computers, the chips, the tech industry, you name it. It's all rolls together downhill. And so it all starts in our number one asset, and that's where we live, where we hang our coat and our rooftops. Ladies and gentlemen, let me break this down for you guys on a 30-year fixed mortgage rate right now, today, as of March 4th, when we record this video, they are at 6.65%. That's up 15 basis points from previous weeks. Freddie Mac also said Thursday that the 30-year was last at this level in mid-November of 2022. We have some volatility in the market. Expect it, ladies and gentlemen. As long as we have volatility in the market, interest rates going up, there's opportunity for investors and for home buyers. This is the time to take advantage of discounted real estate prices. You're not going to find this in a year from now, 2 years from now, and economically over the long haul, prices are going to continue going up. So when people come to me and say, Jerome, should I be buying real estate right now? The answer is always yes, because in the long-term future, the cost for real estate is going to continue to go up. Now, the cost of money is always going to be volatile. If you look back to the 70s and you look back at the 80s, where we saw double-digit interest rates, and then we saw them go back into single-digit interest rates were still high. If you even just go back to the 2008 recession, post-2008 recession, interest rates were still sitting at 6 and 7%, almost exactly where they're sitting today. And in spite of everything that's happening today, interest rates feeling substantially higher than what they were even just a year and a half ago, the chances of us seeing 2% and 3% interest rates again is pretty slim. Now, is it possible? Yes. But the chances of seeing that in the real near future is very slim to none. Now, understand that although money is more expensive today than it was a year and a half ago, and yes, the cost to borrow money at inflated interest rates costs the end user a substantial amount of money, typically hundreds, if not thousands of dollars more in their monthly mortgage payment. So as interest rates and mortgage rates themselves start to go down, you'll start seeing buyers start flocking the market to lock in rates and purchase. When that happens, inflation on real estate will go up because the need for doors right now is still at an all-time low and an all-time high for the need itself. So ladies and gentlemen, as the interest rates continue to go up and the market continues to stabilize or get stressed, is your opportunity to take advantage of decreased prices and purchase investment real estate for long-term holds and assets that'll produce cash flow for you long-term. For market updates, content related to real estate investing, and more content just like this, click below, subscribe to our YouTube channel, and pound that thumbs up button. We'll see you next time.